Is it this year? Is it next year? Just imagine you are at risk of a heart attack, and then I say, someday we'll have the productivity conveyed to profits that will cover the budget deficit. Okay.
323 trillion. That's the total global debt, an all-time high. Meanwhile, US debt just crossed $36 trillion, growing by $1 trillion every 100 days. Interest payments alone are now bigger than military spending. Ray Dalio has studied 500 years of economic cycles, and his warning is clear. We're entering the most dangerous financial phase yet. Rising debt, geopolitical conflicts, and a broken monetary system are pushing the world toward a crisis few are prepared for. Will you be one of them, or will you see the warning signs before it's too late? At the start of 2025, the global economy is moving through one of the most crucial phases in history, one that Ray Dalio calls the big cycle. This cycle isn't about short-term recessions or market dips. It's about the rise and fall of entire nations and economic systems. Dalio has spent decades studying financial patterns and warns that we are now in the late stages of this cycle, where history tells us major financial and social disruptions tend to unfold. According to Dalio, every major empire in history, whether the Dutch, British, or American, follows a predictable cycle. It begins with a period of strong economic growth and global influence, then shifts into excessive borrowing, rising debt, and widening inequality. Over time, this leads to political polarization, social unrest, and ultimately the decline of economic power. Dalio points to 1930 to 1945 as a critical reference point, a period marked by extreme wealth gaps, political conflicts, and global economic instability. Sound familiar? He asks. He warns that today we are dangerously close to repeating those patterns. The biggest mistake most people make is to assume that the future will look like the past. A clear sign of a late-stage big cycle is when governments rely on printing excessive money to keep things afloat, something we've seen in the past few years. This weakens the value of cash, fuels inflation, and leaves everyday people struggling to maintain their standard of living. We are now at a turning point in the big cycle where financial, economic, and political instability are converging. Recognizing these patterns isn't just about predicting the future, it's about preparing for it. Those who understand these shifts can take steps to protect their wealth, investments, and families before it's too late. The world is facing an unprecedented financial challenge. Global debt has skyrocketed to nearly $323 trillion, setting a new record. This staggering figure, fueled by years of low interest rates, aggressive government spending, and economic uncertainties, now represents over 335% of the global GDP. Ray Dalio has repeatedly warned that excessive debt accumulation leads to instability. He states, when credit cycles reach their limit, it is the logical and classic response for central governments and their central banks to create a lot of debt and print money. While this strategy may delay a crisis, it often results in severe long-term consequences, such as high inflation, devaluation of currencies, and increased financial inequality. The US national debt alone has surged past $35 trillion, with annual interest payments now exceeding $1 trillion, a burden that is becoming unsustainable. Meanwhile, China is grappling with a mounting property crisis, adding to its already massive debt. The IMF projects that total global public debt could reach $100 trillion by 2030, making economic resilience increasingly difficult. What does this mean for everyday people? It means rising inflation, higher borrowing costs, potential tax hikes, and slower economic growth. It means savings could lose value over time, and governments might struggle to fund essential services. Dalio warns that debt crises are typically followed by social unrest and geopolitical instability. factors that could shape the world in ways we haven't fully prepared for. The rapid accumulation of debt isn't just a financial issue, it's a global crisis in the making. Understanding its implications is crucial for individuals and investors alike to make informed decisions and secure their financial future. The wealth gap has reached alarming levels, and Ray Dalio warns that this is one of the biggest threats to economic and social stability. The rich are getting richer, while the middle and lower classes struggle with rising costs and stagnant wages. This growing divide is not just unfair, it's historically dangerous. Dalio explains that when the wealth gap reaches extreme levels, tensions between economic classes explode. In the US, the top 10% of earners now control over 70% of the country's wealth, while millions live paycheck to paycheck. Stock markets boom, corporate profits soar, but for most people, life is only getting harder. When the rich get richer and the poor get poorer, you create a dangerous environment. It has happened throughout history, and it is happening again. This imbalance is fueling political divisions, civil unrest, and declining trust in the system. Throughout history, extreme wealth inequality has led to revolutions, radical policy changes, and social conflicts. Dalio compares today's situation to the 1930s, when deep economic divides led to global instability and dangerous shifts in power. Historically, when wealth gaps get too extreme, they lead to revolutions. You either have peaceful reform or violent conflict. It's one or the other. Most people don't see what's coming. They assume things will fix themselves, but history suggests otherwise. As frustration grows, expect major shifts in politics, taxation, and policies that will reshape the economy. The best way to prepare is to understand these patterns, diversify assets, and stay ahead of economic shifts before the system reaches its breaking point. The world is witnessing one of the biggest power shifts in modern history. Ray Dalio warns that China's rise and America's decline are setting the stage for a dangerous geopolitical conflict, one that could reshape the global economy. Dalio has studied the rise and fall of great empires and warns that when an emerging power challenges an existing one, tensions rise and conflict becomes almost inevitable. Historically, this has happened many times. The British Empire versus the US, the Dutch versus the British, and now the US versus China. When there is a rising power challenging an existing global power, history has shown that there is usually a period of conflict, sometimes economic, sometimes military. For years, China has been expanding its economic and military influence. The US is now struggling to maintain its dominance, leading to trade wars, technological battles, and rising tensions over Taiwan and the South China Sea. Meanwhile, sanctions, military posturing, and economic decoupling are further increasing the divide. Dalio warns that these tensions are not just about trade or politics. They affect global markets, investments, and even the value of the US dollar. As China pushes for more control over international finance, the dominance of the dollar as the world's reserve currency is being questioned. We are seeing a shift in economic power that will change how money flows, how businesses operate, and how global alliances are formed. Most people don't realize how serious this shift is. The outcome of this power struggle could impact job markets, investments, and the overall cost of living. Understanding these changes is crucial to preparing for what's ahead. The AI boom is driving a wave of speculative investments, with companies racing to capitalize on the rapid advancements in artificial intelligence. Ray Dalio warns that this frenzy bears an eerie resemblance to the dot-com bubble of the late 1990s, when irrational exuberance drove stock prices to unsustainable levels before a massive crash wiped out billions. Dalio cautions that while AI is a revolutionary technology, The excitement surrounding it has inflated stock valuations beyond their real earnings potential. There's a major new technology that certainly will change the world and be successful, but some people confuse that with the investments being successful. Many AI-focused companies are now seeing their market capitalizations soar despite lacking profitability or proven long-term business models. Just as the internet did in the early 2000s, AI is attracting enormous capital, creating unsustainable valuations that could lead to a significant market correction. Investors are buying into the future potential of AI without fully understanding the risks, a classic sign of a bubble. Dalio points out that the high valuations of AI stocks, combined with rising interest rates and global economic instability, could prick the bubble sooner than most expect. Where we are in the cycle right now is very similar to where we were between 1998 or 1999. If history is any guide, when speculative bubbles burst, they don't just impact the overhyped sector, they drag the entire market down. For investors, the key is to separate AI's long-term impact from the short-term investment hype. The technology will shape the future, but not every AI company will survive the coming shakeout. Those who blindly follow the hype may face severe losses, just as many did when the dot-com bubble collapsed. These aren't just distant economic warnings. They are unfolding now, and they will impact every American in ways most people don't yet see coming. Ray Dalio warns that we are heading toward a dangerous intersection of financial instability, political division, and global tensions, and the average person will feel the effects in their daily life. One of the biggest concerns is the devaluation of cash. With massive government debt and continued money printing, inflation will erode the real value of savings. Prices for essentials, housing, groceries, healthcare, will keep rising, while wages fail to keep up. Dalio explains, people think cash is safe. They don't realize that with inflation, it's constantly losing value. It's like an invisible tax that people don't see until it's too late. Job security is also at risk. As economic slowdowns and rising interest rates squeeze businesses, job cuts and hiring freezes will increase. Many companies, especially in overhyped sectors like AI, may collapse under financial pressure, leaving thousands unemployed. Social unrest is another ticking time bomb. When people can't afford to live, when wealth gaps widen, history shows that tensions explode into protests, strikes, and, in extreme cases, civil conflicts. Dalio has repeatedly warned about this cycle. When a country's financial problems grow too big, social unrest follows. And when that happens, governments often respond in ways that make things worse. This crisis is not just about Wall Street or politicians, it will hit everyday people hard. The cost of living will rise, taxes could increase, and financial uncertainty will dominate the next decade. The best defense is preparation, understanding the risks, diversifying assets, and taking control of personal finances before it's too late. With economic uncertainty, geopolitical tensions, and financial instability growing, Ray Dalio stresses the importance of protecting your wealth before it's too late. He warns that those who fail to adapt to the changing landscape will suffer the most, while those who prepare will have a chance to not just survive, but thrive. Dalio strongly advises against keeping too much cash as inflation continues to eat away at its value. Cash is the riskiest asset over time because it loses purchasing power. People think it's safe, but it's like an invisible tax that erodes your wealth. Instead, he emphasizes diversification across different asset classes and global markets to reduce risk. He recommends a balanced portfolio, including gold, commodities, inflation-protected bonds, and international investments. Gold has historically performed well during inflationary and geopolitical crises, while inflation-protected assets help shield wealth from the ongoing devaluation of currency. Real estate in strategic locations and investments in essential industries can also provide stability when markets turn volatile. Beyond investments, staying informed and aware of economic cycles is key. Dalio explains that understanding historical patterns allows people to make smarter financial decisions and avoid repeating past mistakes. The people who win in times like these are the ones who understand history and use it as a guide to navigate the future. Doing nothing is the worst decision. As the economic environment shifts, those who take action now, by diversifying, securing alternative income sources, and preparing for higher costs, will be in a much stronger position. The coming years will be turbulent, but with awareness, discipline, and the right strategy, you can safeguard your financial future and ensure stability for your family. Ray Dalio's warning isn't just a prediction, it's a wake-up call. The financial system is shifting fast, and most people won't see the fallout until it's too late. But you still have time to prepare. Stay ahead, stay informed, and take control of your financial future. If this video gave you insight, hit like and subscribe. We bring you the facts others ignore. And if you think this crisis won't reach the housing market, think again. Watch our next video. Experts, this is going to be really tough for the housing market. To see what's coming next, click now before reality hits.